So guys, this is shocking. Westpac have doubled their home price growth forecast for 2025 and 2026. Let's unpack the reasons why and where they expect there to be the most growth. Hey everyone, it's Scott here from Freedom HQ in Sydney with another daily property update. This is your 3 to 5 minute update every single day on property, the economy, your money, your wealth, so that you can be a property insider. Let's move towards financial freedom, guys. So I'll talk today about how Westpac has just upgraded its housing forecast. And Westpac has actually doubled its forecast for home price growth in 2025 and also in 2026. So previously for 2025, they said the market would grow about 3%. They now say 6%. This is national median house price. And now what they are saying for 2026 is 9% growth. Now, what's interesting is they point to Melbourne as being the leading capital city for growth in 2026 at 10%. Now, think about that. If the median house price growth in Melbourne is 10%, that will mean, hey, some suburbs will grow less than 10%. It means we'll see some suburbs in Melbourne grow 12, 15, some may even grow 20%. You have to remember in Melbourne, we've got a lot of pent up demand. This is first time buyers and investors that maybe have thought about buying into Melbourne, but because the market has been depressed, they're thinking, hey, prices may drop, they may continue to fall. So I'll wait and I'll try to save money. So once people see that the market has bottomed out and started to turn around and started to have home price growth or stabilization, that's when they start entering the market. That's when the fear of missing out can kick in because they think, hey, if I wait 1 month, 2 months, 3 months, there may be growth and I may have to pay 20, 30, 40 grand more. So I will get in now. This starts a little bit of a ripple where people start to get in and buy, prices grow a little, then more people get in to buy, then prices buy again, and then even more people get in, even more demand, and then prices grow again on top of that. So it can cause that ripple effect and start to send the market upwards. Now for Sydney, they're saying 5% this year and 8% in 2026. This will push median dwellings in Sydney to 1.35 million by the end of 2026. Brisbane and Perth, they're saying 7 to 8% growth this year in 2025 after some really big gains in 2024, slowing down to a more moderate 8% in 2025. Hobart has the weakest forecast with just 3% in 2025. So why should we even care what Westpac says? Well, guys, the big banks spend millions of dollars on forecasting the economy and forecasting the housing market because typically on their balance sheets, they have 60% exposure to mortgages on residential properties. So what's actually happening in the market will affect them and their profitability. Also, for future lending, they do not want to loan money into housing markets, which may potentially go backwards, and they do not want to loan money into suburbs or markets, which may in fact be overpriced. So they do pricing forecasts suburb by suburb, region by region, all over the country. So what the big banks say definitely needs to be taken into consideration. So why has Westpac actually upgraded their forecast? Well, firstly, there's very tight supply. There's only 68,000 homes listed nationally for sale. This is extremely low. There is strong demand. I mean, in Sydney, for example, the auction clearance rate is surpassing 70% week after week. The time to buy sentiment index is actually up 10% in August after the rate cuts. And guys, surprisingly enough, cash purchases now make up 30 to 40% of the market. Used to be 20%. So retirees that are using their superannuation and also families supporting each other to get into the market is keeping demand a lot stronger than expected by Westpac. Westpac does admit they overestimated the affordability constraint. Buyers are finding ways around it. They're finding the money so prices can run harder for longer. The big takeaway is affordability is not stopping this market. Prices won't slow. They're set to launch again in 25-26. So guys, unfortunately, the crash that you wanted and needed if you're looking to get into the market is not coming. Rates are down. First-time buyers are flooding back into the market thanks to the 5% deposit scheme. Investors are piling in at record levels. Immigration is still running hot. Affordability is at crisis point. Vacancy rates are at record lows. And if that wasn't enough, dwelling approvals have also collapsed. Make sure you hit that like button and hit subscribe so you can continue to get this information every single day so that you can be a property insider.